Mark Cudmore is bullish about global stocks. Take a look at his latest piece on the Bloomberg. He is certainly arguing the bull case, saying that as investors become more optimistic on the economy, yields will rise and stocks will climb to fresh records. Our Markets Live executive editor joins us now. Mark, is it US markets or is it global markets?
It is much more global markets, but of course, in this world where US markets are so important, you can't really be bullish global markets if you are not at least slightly bullish US markets. I just don't think that's where the juice is. I think where US stocks are not only some of the most expensive valuations, but they are the ones that have priced in the full benefit of a potentially aggressive Fed policy, while also still being optimistic on the economy. Now, my base case is that we'll actually see yields rise because global growth and even US growth is doing absolutely fine and recession will not come. And so yields will back up. I think stocks in the US will do fine through that, but they won't necessarily do brilliantly. They'll bounce around a bit. But that backdrop of good growth holding up okay, I think we'll continue to see fresh records around global stocks. And of course, it is helped by that whole dynamic, that fresh dynamic of what's happening out of China. As you know, I've been a bull all year even before that dynamic's come in, but that definitely helps the margin, even if the short-term price action today was actually quite disappointing on the session.
You only have to look at what markets do, futures in equities, Mark, do on a day where expectations rise that we get a 50 basis point cut from the Fed to see that markets are still primed to move around Fed rate cut expectations. And if the global economy does as well, or the US economy does okay, as you suggest, we maybe don't get so many rate cuts. But you think stocks can still go higher in that environment?
Yeah, but we've got to remember that what's happening at the moment is that we're pricing in that we're going to have a really, really severe slowdown. And that's what's really, the problem with stocks. Now, obviously, the short-term moves in yield, it is supportive to know that, hey, the Fed's going to react to that. They're not going to go into this slowdown and keep rates really, really tight. But I think if we get a narrative that, hey, the economy is not folding, and I think that's a very important assumption and probably where my base case needs to be most closely challenged. If the economy holds up in that environment where rates move higher because the economy is not struggling, the economy does not need easier policy, that is a supportive environment for stocks. And that's the point I'm making, that if there are the conditions which see yields rise, those are the same economic conditions which will reignite the stock rally yet again.
Let me ask you the same question I asked you yesterday, which is about the Chinese consumer. We feel like we've got a PBOC sugar high coming through. How long does it last?
Well, the price action today was pretty terrible. Hong Kong stocks opened so much higher and, ending towards the lows is when I walked into the studio. So I'd say that the very short-term price action is people are still not convinced by this. Obviously, on a two-day basis, they're still up a lot, and the gains we've seen in the region are generally very high. I think this is going to last. I think the people who are disappointed are the people who are looking for China to return to the bull story of the mid-2000s. That's not happening. But we're no longer going to have the negative story. We're going to have a holiday next week. Consumers are going to talk with their friends and family and get more enthusiastic on the economy.